I got $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well, what can I do to get back
I'm sorry, sir, but this line is for bank members only.
I just opened an account.
Do you have any money invested with this bank?
No, you just lost it all.
Then please stand aside for people who actually have money with us. Next, please.
Hey!
Hello, Mrs. Farnickel. How are you today? Making a deposit, are we? Great. We can just put that into your retirement account and make it go to work for you, and it's gone.
What?
Sorry, yeah, that's gone. Please step aside for people who actually have money with the bank. Next, please.
Dad!
Hey, I'm trying to teach my son the importance of savings. You already lost his money? Oh, Mr. Marsh, don't worry. We can just transfer money from your account into a portfolio with your son, and it's gone! This line is for people who have money with the bank only. Please step aside.
And it's gone. This line is for customers of the bank. Painfully funny. I'm not an avid consumer of shock cartoon comedy like Simpsons or The Family Guy, but this type of humor often is an unfiltered commentary on modern culture. The irony and satire becomes very real as Americans have in recent days been rushing to the regional banks to get their milk, gas, and rent money secured as soon as possible. Today I'm going to cover a bank stock that's on my watch list, and I'm going to review the new inflation data. How is that going to impact the market going forward? We're also going to do a micro review of the banking sector and why did Google stock jump today and what did I do in response? Did I short it or did I load up? This is the Stocks with Josh show. As always, thank you so much for hitting the like. Join the family by hitting that subscribe and that YouTube all notification bell. Watch out for the scammers. If you need better trade tools, there's an offer from the Moomoo investment app. They're currently giving away up to 20 free stocks for opening and funding an account. You can click on the link in the top pinned comment for all the details. I host a chat group on the app called Stock Josh Fam. If you're on Moomoo, then come over and find us. Get your free stock if you're not, and then come find the chat group. We'll continue the conversation there. All right, we got that inflation data this morning, and it was actually pretty good. It largely came in line with expectations. Many, though, were expecting it to climb and prove that inflation was going to remain a very sticky issue or a persisting threat to the market. The Consumer Price Index, CPI, rose 0.4% last month after gaining 0.1% in March. The increase was in line with what economists were expecting. Stubbornly high rents accounted for much of the increase in the inflation that we saw. In my view, the inflation data seems to suggest that the Fed could afford to pause raising rates, but it would stop short of suggesting that he could actually cut rates. Inflation is going to continue to be problematic, but at the moment, it doesn't seem to be as bad as feared. Yet despite this good news, the market remained confused. Yet again, it was big tech that pushed up, while the rest of the market was either gray, which means that the price was flat, or red, which means obvious decline. Google was one of the biggest big tech movers of the day with a 4% pop up. Now you guys know that I sold all my Google shares. I sold them at $109. I accumulated those shares below $92, which I told you months in advance it would hit. It did. I was able to cash out with a huge increase. I also told you guys that if the price got back above $108 to $109, that I could just jump back in. I did not buy the shares, but after it moved back above 108, I jumped into some call options. This is a confirmed breakout on Google, and the stock could actually move up at this point to $117. That's my target, not my prediction. My get out price is going to be any close back below $109. That's the risk line that I've drawn in the sand for my investment. I'm bullish above 109, I'm bearish below. So what moved the stock price higher? Well, today at Google's annual development conference, these guys announced a $1,800 phone with built-in AI. You guys, I tell you, these phones are getting more and more expensive. I am sure that we're going to break over that $2,000 phone price barrier. They're getting more expensive than laptops, more expensive than any other technology in our lives. So the stock popped because the market loved it, because the market loves any talk of AI. In a recent video, I talked about how big AI is. I even called it a recession killer. AI, in my view, is drawing a line in the sand for winners and losers for all of 2023. Companies that are quick to adapt are going to get that AI earnings boost by the end of this year. Companies that fail to adapt are going to get crushed. If I were a CEO of a large cap company in the US today, every other word out of my mouth would be AI development. So the market loved the new AI-driven phone, and the stock is just absolutely broken out. It also doesn't hurt that these guys offered that massive share buyback strategy, which simply tells us that they believe that their stock is too cheap right now. My target right now is 117, and for my call options that I may convert to shares, at that point my stop loss will be in at 109 again. Okay, let's get into some banking stocks. Banks are still on the chopping block because nobody knows what the Fed's going to be doing. If he continues to raise rates, it's going to continue to crush the bank's bond portfolios, leaving them in a cash poor position. If he pauses or pivots, then there's going to be relief, and that will allow the bank stocks to potentially rally from their deeply oversold conditions. The battle over the banks are between the value investors and the ruthless bank stock short sellers. An interesting article that I read recently quoted an analyst as saying, "We believe regional banks are suffering from a GameStop-like moment where misinformation circulating on social media is fueling stock price declines that threaten funding and solvency." So basically, Wall Street is blaming all of us, all of you guys, for their banking portfolios being in the gutter. It's just like the opening video where they take no responsibility of the money under their care. But in the end, it's going to be the big banks backed by the endless dollar that are going to emerge the winners. Now, there's a number of good players out there. Charles Schwab, I think, is a good one. JP Morgan will do well. I'm not a fan of Jamie Dimon. You guys know that. I'm in the Warren Buffett camp of bank stock picks with ticker BAC, Bank of America. One of the only banks that he didn't recently dump. Now, we all know that Warren is rich enough to not concern himself with timing the market, but I'd like to get a good deal with the basic idea of buying low and selling high. So let's jump into the charts. I'm going to review some support and resistance, and I'm going to keep it super simple. We're looking at the monthly candlestick chart. That's where each candle represents a full month of price action. This allows us to get a very long view of Bank of America. The chart shows us at least the last 20 years. We see that it reached a local high of $50 in March of 2022. It's fallen close to 50% to get to its current price range of around 27. In a parallel channel that I've drawn, I see a possible price target of below $25 to possibly as low as 23. Now I'm going to target buy the $25 range and below. The charts lead me to believe that we will get there potentially in the next 1 to 2 months. Once we get there, the target resistance above will be back around the middle of the channel, around that $32, $34 price range. If we look at the Gaussian channel, we can see that that $25 to $23 price point would be a full test of the bottom of the channel, which I believe that the movement down to the bottom of the channel was confirmed when we broke through the middle of the channel below 32 bucks. We initially bounced off of $32, and on this channel, we rode it up to a profit of 34, 35 bucks. I told you guys then I was selling my whole position, which turned out to be the right move. Now I'm patiently waiting for re-entry. Never underestimate the ability for a stock to fall to irrational levels. I want to point out to you that back in 2006 to 2009, Bank of America went from $55 to $2.50. That was a 95% drop. So my expectation to buy a little cheaper really isn't that impractical. With the volatility ahead and the debt ceiling crisis, I think it's very likely we're going to get there. And if I choose to hold long term, my target will be between 40 to 50 bucks, plus whatever percent that I can gain through selling covered calls in my retirement portfolio. Fundamentally, there's been strong insider selling in the banks, as well as Bank of America. In the last 3 months, 1.4 million shares were sold by insiders versus only 46,000 shares being bought. This also points to the fundamental case for buying Bank of America cheaper in the days ahead. Let me know if you guys are bullish or bearish on the banking stocks and what you think about buying BAC as low as 23 bucks. Do you think it'll get there? All right, guys, thanks again for hitting the like, that subscribe, choose all notifications on that YouTube bell. Go get that free stocks over on the Moomoo Investment app. Find us in the chat. As always, peace and blessings, my friends. I'll see you in the next video.